What's up, everyone? My name's Jag, and I'm just another guy trading the stock market. And I've got a journal entry I want to make, kind of vlog style, about last Friday's price action and the day in general. And yeah, I've just been looking at the chart that I'm showing you right now, and it's just crazy how clean the price action was, and how volatile the market was, and how much volume the market had, and how supply and demand was respected. And when it wasn't respected, it was, very predictable. It gave you trade opportunities, and man, it was just a crazy day. So looking at the chart that I'm showing you here, you can almost like split it into 2 days of price action. Like if I split it right down the middle where my mouse is moving, it's almost like a inverted symmetrical day. Double bottom, double top. In this down move right here could be split. It would say the day closed right there, and then opened, boom, boom, V-shaped recovery. It's almost like 2 days of price action. This is one day, this is the following day, but it happened all in one day. So I think I said on one of my other recaps that it was the best show on TV. Just watching the S&P 500 move, and NQ and QQQ as well. A lot of other stocks, they had good ranges, but they kind of, like, and I think I was watching Nvidia and AMD. They moved a lot, but they ended up kind of closing near their open. But anyway, this is SPY, and I want to just show you the opportunities that I saw right off the bat in the morning. First of all, I've got the 200 moving average on the daily chart plotted right here. And I also have an uptrend. This is the hourly uptrend line. So if I'll go to a little bit cleaner chart that I haven't drawn on quite as much and show you the 1 hour trend. So remember, like, we've been watching something like this. No matter where you draw it, even, if you draw it like this is where I was looking for that line in particular. So this was kind of the line in the sand for the uptrend on the hourly. Now, if you zoom out, we still can possibly save an uptrend by making a higher low. But on this hourly chart from this low in December, we broke trend, and we broke it fairly aggressively. And if we zoom into this chart on the 1 hour, you can see how clean that trend line was retested. It came up pretty close to it, tested the area. You can see all the supply over here, tested that supply zone, and got rejected. All the way back down into demand on higher time frames. So pretty crazy to see that so clean. Break with aggression, come up, retest, and down. And that's the power of trend lines. And you can see you can even move this trend line. We could make it a little bit more accurate, and it would come a little bit closer. But the point is, that was a uptrend break and retest. Pretty insane, along with the 200 moving average on the daily chart. So that was a high confluence area. And you can see that it came up and tested that exact zone pre-market, and I considered taking it on futures. It's kind of nerve-wracking having this huge power move, but if you just zoom out, you can see the break and retest of the zone. You've got the lines drawn there. You got your levels. Everything kind of said systems go, but I didn't take that one. My mind was conservative, staying green for the week, and I didn't take it. And we're also looking at a reversal at the 388 area. So when the market opened on this downtrend, I actually traded Netflix because it was even weaker than the market. The market was weak the day before, but Netflix was even weaker. I had very little green candles. So I was looking for a continuation there, and I got a trade in Netflix. And then got done with Netflix and came right back to SPY, not expecting it to approach this level so quickly, right off the open. Came down to 388. I entered calls here and, kind of targeting 388, this bottom wick. And then I got stopped out. Not immediately, but very quickly for like a 3% loss because I did a good thing to jump on the trade because it was in the trade plan, but I wasn't reset, and I didn't feel 100% mental reset from just winning money on that Netflix trade or earning money. And so I did take it, but I took it for a very small loss, and it ended up wicking down fairly far, but holding 388, and then sending it for a nice $2 move. So we had that one, but we didn't capitalize on it. Then it came up and retested that 200 moving average again on the daily chart, and this was where I wasn't quite at the setup. It was caught off guard at the speed that the market was moving, just making huge volatile moves. And we had seen that the previous days, but very directional. This was find a key level of demand, boom, head to supply. And like I said, it was fun to watch, but hard to jump into, especially for newbies. So it did get cleanly rejected off that level. And when it was around here, I considered chasing it when I got back to my computer, but I didn't, and watched it go below VWAP, considered a trade. Once it started to come down here is when I made this trend line. I said, okay, well, now we have a trend line, and I didn't take the break of the trend line. I waited for the retest, and I actually did take that trade. I took the retest of this trend line with, it had confluence with this whole zone here, as well as the VWAP, and kind of a head and shoulders pattern playing out pretty cleanly on the 5-minute chart. So I had all that going for me, so I took that trade, and I grabbed like 30% on the trade. I took it down to here, and wish I would have left runners, and that's the plan, to start scaling out of my trades. But for now, I'm still trading 1 to 3 contracts. I only had 1 contract on there. So I held it for that one power candle. It was like a dollar move, and it was a 30% trade. And then down here, there was also a nice bounce to the upside. And this reject off this 387.5, I really should have taken this. This was a break and retest. Clean of this daily low. That's it. Previous low, broken, retested, rejected. It's just hard to believe you're going to get these kinds of moves every single time it comes to a key level, but once it happens 3 or 4 times, you got to start believing it. It was a little bit later in the day at this happened at 2 o'clock. Very manageable. I did actually paper trade this. I kept a paper account of contracts that were expiring on Monday. This was a Friday, so the contracts were expiring on Monday. And it would have been 60% on those contracts. You got 30% right away with the point of control from the visible range volume profile indicator. The point of control holding right there at that level. So had all that, but I stuck to my risk management. I just wanted to keep going over this day because it was so full of trades. Then the price came back up and retested the demand turn supply zone again, right off the 50 moving average. And with these key levels over here, this intraday demand turn supply, so clean. Now this was at like 3 o'clock. Yeah, 3 o'clock. So even still, this is where you take, if I would have executed properly, I would have had 3 winning trades. Then I take 25% of my profit, put it on a lotto for this reject. Boom, 500%. But no, I stuck to really tight risk management, super conservative. And what I'm doing is I'm trying to grow my account back to break even all time. And I'm about $400 away. I've been trading options for less than a year. And been trading equity, swing trading, really paying attention and studying the markets for about 3 years. really as a hobby or better, up to full time. Really interested in it for a lot longer than that. But I've been trading options for less than a year, and I had a lot of beginner's luck at first. I got a lot of money, then I lost a lot of money. And when I was about $2,600 down all time, I stopped and I said, okay, I've got the technical aspect of this thing. I understand the scholar part of this. I understand now that what I need is the psychology. And that's what I've been working on ever since. So once I figured that out, there was no point to trade anything more than 1 to 3 contracts. And, people ask me, how come you don't paper trade? And I've been there, I've done that, and I still do. Like I paper traded this trade today. Don't take it, watch the contract, see what happens, put it in your mental bank. Take pictures of it, do videos like this so that you learn next time that's a valid trade. You already knew it was a valid trade. You paper traded it for a huge win. It just so clean, no drawdown, perfect. So, and then, you can't paper trade forever. Like you paper trade so that you learn how to execute in the market. You paper trade so you learn how candles work and so you can get some wins under your belt, get a little confidence. But without real money, we all know that it's not the same experience. So trading one contract, putting $100 a trade, $200 a trade, and working your way up from there once you build an account is the only way, in my opinion. And that's what I'm doing right now. So once I realized that I had it down, except for the psychology, it didn't make sense to trade anything higher than basically one contract. So like on these trades today where I took this trend line reject, I have one contract. My normal plan is if I'm scaled up to 10 contracts, I'm going to be scaling out at 15 to 20% heavy. And then depending on the setup, leaving runners to my targets and hopefully having one to leave to continue on. And if that one goes to 0 or break even, then you're still very green on the trade. And that's the benefit of risking more capital and being able to buy more contracts, being able to scale in and scale out. But for now, I usually try to take high probability setups that I know can get at least 20%. And then I go for 20 or 30% and sell my one contract. Sometimes I get more, sometimes I get less. I try to keep my losers tight. If I have any ill feelings, I'll cut the trade. One thing that I'm working on is trying to stay in trades longer. When we've all been in a trade that wicks up, you get stopped out, and then it comes back down. And your theory was, well, if I would have waited 3 minutes for the 5-minute candle to close, I could have been way down. And in some cases, you're right. What I like to do is I like to wait for that 5-minute candle closure. And if I'm in with a position size, like a basically quote unquote normal position size, I would have a hard stop. Like if it goes past 30%, I'm out. And I can slap myself on the wrist for either, mismanaging the trade or not having a good entry, or perhaps it was just an unforeseen thing that you can't control, and it was actually a really great play to get out at 30% because you didn't realize news broke, or something like that, and it's going against you. So that's what I would do. I have a hard stop at 30%, and or whatever, that can vary. It really depends on your trade plan. But you have that hard stop, and you let the candle close from there. So, I guess that's it for this video. If you guys have any questions about anything on my charts or anything with my strategy, leave it in the comments. And if you see anything that I'm missing, you think you can help me in any way, leave that in the comments too. Please like the video and subscribe. I'm going to be trying to start this from the ground up, and try to do my journaling this way. It really helps me to go back over this stuff and, helps me to answer questions and to get input and feedback on anything that I'm overlooking. So I'll see you on the next one. Peace.